Yep, this is usually a sign of the bottom. Oh man, everyone is pissed at each other. Ross Gerber is fighting with Elon Musk. I hate it when my daddy and my stepbro fight with each other. It's gotten so bad that Bloomberg is literally covering the fight between them on Twitter. It's not even worth covering because honestly, nobody knows what the hell is going on. What I do know though is what's going on. Okay, I'm kidding. I'm gonna give you my best estimate, okay? Because, see, let me give you a quick background here. Elon Musk is like, oh, well, when the risk-free rate on bonds goes up, then people statistically sell, stocks because, they can make money on bonds and stuff. And then Gary Black steps in, he's like, dude, if that were true, the NASDAQ wouldn't be down like 1 to 2%, while Tesla's down like 53% in just 3 months, okay? Okay, thank you, bye. It's a problem. It's a problem, okay? But again, I don't want to get involved in the drama. What I'm going to talk about is what I believe is causing the real pain that's happening. And I'm also going to tell you what I'm doing about it. Mostly because Tesla is a pretty big position in my portfolio, and cheers to that. What is this? Gentleman Jack. Just doesn't do it like Tesla tequila, but this was on sale. So, what's going on? Well, number one, folks, we just had the second largest by volume day traded for Tesla. And it's either because Elon sold, which is unlikely because we're pretty sure we're in a blackout period here before earnings coming up in a few weeks. But the real number one, downtrend, baby. It's that simple. We are in a massive downtrend for Tesla. And guess what makes that downtrend continue? People making profit, shorting, or having puts on the stock because it's extremely profitable. In fact, we kind of just broke that downtrend to the downside. You can see that here. And that is not good. That just reiterates the selling pressure. Take a look at the volume today, though. Look at the movement today. I want you to see this. In my trading group, I mentioned that, hey, after a big drop like this and a channel, we're probably going to see a break up or break down. And I hate to say it, but folks, look how solid that channel was, and we were charting it from here. We're like, oh, it's a channel. Oh no, it's a down channel. Which way is it gonna go? Well, it's bearish. Yep. Okay, downtrends beget bearish tendencies. In English, when stuff going downhill, you put your little kayak on top of the stuff going downhill, and you go, whee! When you're the guy that's like, nah, buy the dip, and you're trying to go up the sewage, you're like this, this sucks, right? Like, it sucks. You're fighting the trend. This is a downtrend. A downtrend has nothing to do with the fundamentals of the stock. Zero. But I'm not here to talk fundamentals to you because I've done that in other videos. And this isn't a video to preach to you about fundamentals. Honestly, if you're even watching this video, you already know the fundamentals of Tesla are strong. You don't need to be convinced by some weenie telling you that, oh, Tesla's valuation is still too high. Really? Really, a company with over $3 billion of free cash flow, potentially investing $10 billion into a Mexico gigafactory to manufacture a lower cost vehicle, growing earnings at 50% per year, even at minimum 40% per year. My goodness, that is a company that's overvalued? Okay, well maybe we'll have to have a talk about PEG ratios in the future because maybe there's a disconnect. But again, this video is not about fundamentals. Let's instead consider the second potential reason. A lot of people have made a lot of money on Tesla over the past years. Unfortunately, people are making less money right now. That is the nature of a recession. In a recession, people make less money. You earn less money on side hustles. You earn less money at your job. You get less promotions. Your other stocks don't do as well. And you kind of want to keep spending, right? So what do? You finance your lifestyle with your biggest stock holding called Tesla. Now, that's either financing your taxes or financing other acquisitions. Maybe you're buying a house, maybe you're buying a boat, a car, or a plane, or you're investing in a business. In my case, I'm putting a lot of money on bets on my startups. And so I had to sell a little bit of my shares, but that's just to make sure that I could finance my business startups and what I need for my business startups going forward. But look, I'm just like you. You might have your own reason. Maybe you're buying a house. Maybe you have a business startup. Maybe you just want to make sure you have enough money next year in case you get laid off. Maybe you want to do the third reason, tax loss harvest. I'm not here to elaborate why it makes sense to sell your stocks now and potentially rebuy them, after earnings next month. In fact, you could even sell your stocks in Tesla now, rebuy them before earnings next month, if you really wanted to, and probably buy in that uncertainty dip we often get in front of earnings. But I'm not going to tell you that Tesla's going to be cheaper in a month from now. So if you get screwed, it's your problem, okay? I'm not giving you that kind of advice. And when we talk regularly, we have these sort of discussions in my course member live streams. Remember, that's the only sponsor of this channel is, whether you follow me to do, to learn about all of my insight, my fundamental research, my understanding of the market, or you just want to follow me to do the opposite. Doesn't matter. You can do that. Join the programs on Building Your Wealth link down below. Hey, you know what? If you win on both sides, that's a win. But what am I going to do about it? Because I can't fight a downtrend. I also am done selling. I want to be clear. I'm going to tell you about my position on Tesla in just a moment as well. But I don't really care about the downtrend. I have I don't need any more money for financing my business plans, and I'm done with tax loss harvesting. So what am I going to do about the rest of the situation going on with Tesla? Well, I've analyzed this quite in detail over the past few days, and significantly today, but even over the last few days. I've looked into short-term calls, short-term puts. Volatility on Tesla, unfortunately, is very high right now, and put-to-call ratios are extreme. So puts are extremely expensive. Short and long-term puts, extremely expensive right now. Easy to get hosed on these. But short-term calls, even though they're cheaper, volatility is still elevated on Tesla. And today, with an 8% down day, oh yeah, volatility jumped on Tesla. Selling calls maybe would have been more interesting, but you want to be careful with that because that one day you snap back and then you get called out and you'll be sad. Although that might be okay with you because then you might want to diversify into like an actively managed ETF that has a high exposure to Tesla. Who knows? I decided that for my portfolio, short-term calls, short-term puts for the bulk of my portfolio, probably not the right option because I have a lot of shares, right? 60 to 70,000 long shares of Tesla. So then there's the consideration about long-term calls and potentially deep in the money calls. I mean, you could go all the way out to 2025 and pick up some $600 out of the money calls. You could pick up some $100 in the money calls. The problem is, in the money calls are very expensive because you're nearly financing, 2/3 of the entire stock, or paying for 2/3 of the entire stock, and you're not getting that much upside leverage. And the out of the money calls, if you just trade sideways for a few months, say goodbye to 7% a month while the stock is trading sideways. And in this environment, I don't know that I want to make any kind of short-term bets that the market is going to V-shape recovery like Larry Kudlow. This ain't a V-shape recovery Larry Kudlow time. So I'm not the biggest fan of making bets on options right now. I am a big fan of playing volatility trades. In fact, I've got a special volatility trade that I'm planning on going a little bit deeper into tomorrow with the course members. And this is a volatility trade where I found volatility is extremely low, and there's some really cool opportunities to take advantage of this, both on the short and the long side. So we'll be talking about that a little bit more tomorrow. I like volatility trading better than just trying to YOLO in one direction or another. And I have found that if you have a bearish tilt to your trading in this market, you're probably going to win 7 out of 10 times, whereas if you have a bullish tilt, you're going to win 3 out of 10 times. It's unfortunately just the way the market is right now. But we'll see. We had some good earnings from Nike and FedEx, or some at least surprises, so we'll see. So what's my answer for my portfolio? What's ultimately the answer? Well, the answer is personal for everyone, right? But my belief is that there is no cheaper option on the future value of Tesla than shares of Tesla. I know that might sound boring, but I believe that my 60 to 70,000 shares of Tesla could potentially be worth $500-600 a piece with a fair and a reasonable valuation in potentially less than 3 years. And I'm willing to make that bet without exactly betting on the timing. See, if you choose options, you have to bet on the timing because the volatility could screw you. If we go into a low vol period, you're screwed trying to sell your options. We go into a high vol period and all of a sudden prices are down, which often when vol goes up, prices go down. Well, then you're screwed too. Whereas if you hold options, or rather you hold shares rather than options, you're not subject to the whims of vol, right, volatility, or the whims of theta decay. So the cheapest optionality on Tesla is Tesla. The Tesla shares are the cheapest way to own Tesla right now, in my opinion, if you already have Tesla shares. If you want to tax loss harvest, I do think there is a benefit to moving to an actively managed ETF that has a large exposure to Tesla, because when and if Tesla does hit those targets, it'd be nice to have those gains built into an ETF that can then rebalance without passing along taxable gains to you. That's a big consideration, because consider this. If Tesla goes from 140 today to 600, let's say, that's a 4.6x. And on a 4.6x, if you're going to end up having to pay, call them long-term capital gains of 30% or whatever, you're going to be giving away one of those probably 30% of that. So you'll be down to about a 3.2x, right? Whereas if an actively managed ETF can balance that out for you and diversify some of the risk that might still happen to the downside, then there could be less pain in your portfolio. But the other thing you could do is you don't have to go all in on either direction. You don't have to go all in on Tesla. You don't have to go all in on, and I certainly would never recommend going all in on Tesla. And you don't have to go all in on one actively managed ETF. You can diversify. Pick some ETFs, pick some single stocks if you want. But my belief is that what we're seeing right now is the definition of the market can remain irrational longer than you can remain solvent. And if you are deep in margin, you're probably selling out of panic right now. And that makes sense. There are two reasons to sell right now. Either you're minimizing your margin, or you have opportunities that you need to make sure don't disappear because your stock portfolio is going down. That's as simple as it is. Now, if you have to pare a little bit of your portfolio to do that, that's okay. That doesn't make you a paper hander. That doesn't make you, weak. That makes you smart. You're minimizing your risk and maximizing your potential to make sure you could still get through the next year. But do I think that the best move for me is, dump all of my Tesla shares because they're down so much? Oh my gosh, what a clown. Wow, his stocks went down. I don't have a magic 8 ball. I can only look at the fundamentals of Tesla and tell you they are godly beautiful. That's it. That's all I can tell you. That's it. I cannot move the stock. That's it. It's that simple. So we are facing an ugly downtrend. People are financing their 2023. People are tax loss harvesting. I've done some of that as well. I actually think after my 30 days right before earnings, I want to buy Tesla if we have a nice little dip before earnings again, which we might. And then I'll be back to hopefully the share position where I was previously. So I'm optimistic. I realize the pain is very, very high right now, but this is what retail capitulation looks like. And retail's getting screwed here. Tesla is a heavily owned retail stock, and people are losing faith. And it's unfortunate, but when people lose faith, it's a sign of that irrationality, unfortunately, that comes with market pain and stock prices going down. People look at their portfolios, get emotional, and sell. And sometimes they sell completely out. That's not me. I am not leaving. Thank you so much for watching. I got some gentleman's jack to get to. Thanks. Bye.